welcome back guys to another episode of Pain with X Trillions. So today's video we're going to be going over a USD ZAR trade that we took on Friday the 10th of December. So right away we can see three huge vector candles bursting above the Asia range, also above the previous day's high. Now that right there is a huge sign that market makers are working this pair. That's a 900 pip move out of the Asia range in three candles. 900 pips in 45 minutes. So what's the purpose of that move? Well, it's to get retail traders to chase that huge volatile move and trap them above the range. Breakout traders or traders with pending buy orders above this range, we can assume have been triggered by that huge move. Simultaneously, any stop losses of the sellers in this range have just been swallowed up, right? So right now, what are we expecting? Well, we want to see another move to the high just to induce any last few longs before making that reverse and taking their accounts. Guys, look at this candle. Look at this candle. Anybody that trades, you know, support and resistance, they're going long right now. Meanwhile, we are patient. We are waiting for the dealer to show us his hand. In order to execute confidently, we need to see something that we know, something that we've studied, you know, something that repeats itself over and over again. We are not shooting in the dark over here. We know what our setup should look like. Right now, retail traders are telling their friends how this pair is about to go to the moon.
It's going to the moon! Boys, it's going to the moon!
So, right now, look at the spread. Closing down. This is where we're looking to take our shots. Some of us have started to get in. This is where you need to ask yourself, why don't they want to go back to the high? Why are they stalling out right here? That's because they don't want to go up to release the traders trapped at the high of that first spike. Okay, so price looks like it's starting to roll over, still showing retail traders along. And there we have our close below death. We are in and we are looking for our shift candle. It's the shifting away from the high that confirms to us that we're right in our assessment. Look at that. Pulling away from all of those retail traders that were just buying this pair. Amazing. That spike down that puts retail traders in a panic is the same spike down that produces us profits. Retail traders' pain is our profit. Right here is where retail traders that have gone long at the high start to act irrationally. You know, they move their stops. They start to add to the loss in hopes of pulling back the loss. And as you can see, the trade continues to relentlessly drop down. Beautiful. Notice how price stalls around these levels. You know, the blue tracer, the previous day's high, also the EMAs. So this is where you need to ask the questions. Why are they stalling? Why are they stalling price at these points? Well, if you were on the wrong side of this trade and you were stuck in a long position from the high of the day, then all of these little bounces on the way down are going to give you false beliefs that you're still correct in your bias. And that is gonna, you know, make you want to hold on to the trade and just hope that it comes back instead of just taking the loss and moving on to the next trade. If you have studied our material on this channel, or if you are part of the X Trillions army, then you will know that these points are simply there just to shake us out of our positions. But we know better than to be shaken out by these guys. We execute at the extremes, and while retail traders are adding to their losing positions, we are scaling out, taking profits off the table, protecting any remaining positions we have, and then preparing for the next trade. So guys, if you've enjoyed this video, don't forget to give us a thumbs up, comment, hit that subscribe button, and we'll see you on the next one. Take care.